Meanwhile, a new report on Canada's housing market warns that it will slump within the next 4 years. The country has seen a decade of rampant home building and price growth, and new figures show that real estate prices rose again last month. Christian Yeo is joining us live from Toronto with the latest on the housing market. Christian, what can you tell us?
Yes, Michelle, a lot of people here wondering whether or not we're in a housing bubble here in Canada. As you know, Canada was lucky enough to avoid a house price crash around 2008 when the US, Britain and the rest of Europe saw prices dip. When I arrived here in Canada from Britain at the start of 2013, it felt a bit like a time warp, like it was in Britain and America 5 years previously. Rampant demand for housing, rapid house building, home design shows were very popular. People were looking to flip houses, short-term gain on house prices. And when I questioned Canadians whether they thought there could be perhaps a price correction coming up, people seemed very confident that things were different here and the banks were more smart and they didn't take the risks that we saw elsewhere. I was a bit skeptical about that, overconfidence slightly. Fundamentally, what we saw in the US and in Britain and in Europe was a culture of overextending ourselves to buy houses on the assumption that prices would continue to rise. And sadly, it's a worryingly similar scenario here right now.
It's the red-hot housing market that refuses to cool, despite warnings for some time that a correction is just around the corner. As Canada's housing climbs ever higher, so are the prices.
The one thing that economists have proved year over year is that they don't know what's going to happen. My crystal ball's broken, their crystal ball's broken, no one knows what's going to happen.
The average price for a home in Canada hit $383,000 last month, according to one report. That's more than 7% higher than the same month last year. But the Bank of Montreal predicts the market will slump within 4 years, in large part because of an aging population. It claims that so-called echo boomers, that's 25 to 34-year-olds, the offspring of the so-called baby boomer generation, have been propping up Canada's condo market. But as they get older and seek the quiet life outside the city, who will move into these sprawling cities?
A lot of these echo boomers are going to want to move into houses with yards, but they aren't necessarily going to sell. They may keep it as an investment. I see that quite a bit. I was just asked today to find something for them to live in 2 years, and then they want to move into a house and then keep that for rent. So that's going to be the norm. And because of our immigration that we have here being so strong, then I think that'll be supported.
In Toronto, renting is fast becoming more popular with the young than buying. Many can't afford a mortgage at current prices. Others refuse to buy right now, hoping for a price correction. We went to the epicenter of Toronto's condo boom, a trendy enclave downtown called Liberty Village.
I'm in a condo and I've been renting for 3 years, but I've actually moved 3 separate times. I currently work downtown. I do want to eventually own, but not in the city, but right now it's just convenient to rent. And then hopefully I'll own, but in the GTA suburbs probably.
I rent. It's a basement apartment and I've been renting for about a year. I've got a lot of other things on the plate first. I mean, eventually, yeah, I wouldn't mind owning my own place. Probably a house in Toronto and a cottage somewhere up north.
It's definitely expensive. I've even contemplated moving back in with the rents just to save some cash. But yeah, it's eating up a lot of my disposable income for sure.
And as the buyers, like you saw there, are taking a wait-and-see approach, the IMF is warning that prices in Canada have more than outpaced earnings, and that's now made the Canadian housing market the second least affordable market in the world, Michelle.
Wow, that is quite a significant price jump, and ironic coming from Canada, as you said. Now, the realtor in your piece, Christian, mentioned that immigration, foreign buyers are really supporting the market. How big a role does foreign investment play in this?
I think certainly in the last 12 months, they've played more of a role as younger Canadians have struggled to afford those first rungs on the ladder. A lot of wealthy immigrants from countries like China came over here, or they bought pre-construction condos on the promise of short-term price gains and also rental income as well. And a lot of the immigration policy that the government had here helped facilitate that. Whether these immigration policy changes that we're now seeing will impact on the immigration flow and the prices remains to be seen. But cities like Toronto and Vancouver are particularly vulnerable to those changes, Michelle.
Well, how much is a factor the bank's lending policies? If interest rates rose and mortgages were harder to come by, surely that would affect prices?
Yes, absolutely. The Bank of Canada has been warning that it needs to raise rates at some point, but it's been kicking the can further and further down the road. And the big consumer banks here were braced for a rate rise. But as the Bank of Canada sort of backed off the idea of raising interest rates, we saw a race back down to the bottom to get mortgages at the lowest possible rates. Rates are around about 2.5% right now, and the IMF itself says that the lower the interest rate, the more overpriced property is. And Belgium is the only place where property is even more overpriced than Canada, and its interest rates, surprise, surprise, are even lower. So a rate rise, Michelle, really could cool the market here.
That also seems to be the advice of the IMF. All right, thank you so much, Christian Yeo, live in Toronto.